The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this the 6th day of August. My pleasure to be here. Let's go straight into the market because this is a very important phase. If you're looking at the chart I'm showing right now, this is the 120-minute chart. What I said to subscribers to my opening call this morning is that there's a good chance that the E-mini, S&P E-mini, at the time it was trading at about 28.42, that there was a good chance that it would make a leg D. In the Chapman wave, we're always looking for those fourth highest peak D, and that there was a left side, right side price time match to the 28.49.50 level, and that it had all day to get there. It had until about 6 or 8 o'clock tonight to get there. That would be what I call the left side, right side Chapman wave price time match. We're trading right now at 28.48, up 8.50. And it looks like that 120-minute chart is trying to get there, should get there today. Now, a couple of things, and I'll talk about it as we move along. So let me get out of the 120-minute chart. You won't see much in the monthly here because this is the latest contract. Continuous contract will give you much more. But in the daily chart, there was a very quick, there were 1, 2, 3, 4, 5, 6 days pullback from the 28.49.50 high of the 25th of September, of July, down to the 27.91 round number low, trough B. We've taken just 2 days to come all the way back and come within a 1.5 of testing that. That is usually very good action. The big thing is here that in the monthly chart, well, I'll show you the monthly in the S&P cash in a moment, there is still very good action there in the Dow, in the key, almost all the indices. The monthly charts are very good. Only one that's a little shaky right now is the IWM, the Russell 2000. But it's the weekly chart. See this rectangle formation? And my rule of thumb is that within a rectangle formation, you could have, if the low holds and isn't taken out, you could have a rally in a shorter time frame that goes to a peak D, and then it goes either to exactly on or just above the previous high. Well, look what's happened. We've gotten to a leg D. Then it made a peak D last week. That was the high of 28.49.50. The rule of thumb I have is if there is a very quick D to E and then E fails, going sharply lower, that's usually below the last bar's low, that says you've got to be careful because of a pullback. So there are a lot of things that are saying right now, we're bumping into resistance. Now I can go to the bigger picture. Let's just do that right now. The Dow was down 76 or over 70 points earlier on. It's come back. It's now up 35. Nice action. There's a Chapman wave falling axe, lower highs, trend line, much lower lows, trend line, and that creates a V or a cup-shaped formation. Says if it takes out the left side high bar of significance, the closest one, that's going to be very important. Well, there isn't a peak, but there are a couple of bars. But most importantly, you can see that we're in leg C in the 120-minute chart now in the Dow. I'll do this very quick. Should I do the numbers first? Let me finish the numbers. I hope I remember to come back here. So just make it real simple. We're short the Dow. I'm anticipating that there's going to be a test of underneath 25,587. Right now we're at 25,503. Some kind of a double top formation could form. But if the MACD holds well, and now it's holding well, it was turning down earlier on from Thursday and Friday, and the stochastic is able to rally some, you could have enough energy to go a little higher. And that would be, say I'm wrong in the shorter term because it's trying to get above that left side high of 25,587. There's a lot of resistance in this whole area, in the 25,500 to 600 area. But the MACD in the weekly chart is cross positive, and rather than slipping a little bit today so far, it is up, and that's good. And the MACD is important, but the stochastic at 89% is quite strong. As I say, the weekly chart is very good. I'm going to go to the others quickly because I want to get to a little more detail, even though it's not technical Friday. The E-mini, the S&P cash at today's high of 2849.17 has just gone a point above the previous high of peak E. And now the question is, has this recycled? This is a new A, or do I just continue the lettering and say, for now, we'll treat it as an F, but it could in fact be an F/B, and that's what I'm going to put, F/B. Why? Because that peak D right there, we did not go below the trough after peak D where we started leg E. That could be an E/A at this point. So that could be a positive. The MACD is good, not great, but good. Stochastic's very weak at 66% is rallying. So this whole double top concept is really what I'm looking at. I'm going to get to the 120-minute chart to explain some things a little more. Quick leg E, this could be a Chapman wave instant restart. Cannot rule it out. But in the meantime, it's that monthly chart that is just, whoa, 2872s. All right, we'll have to wait. Right now, it's in a very strong leg in August, taking out the July high, and that's important. QQQ, 1, 2, 3. That is the Invesco QQQ Trust Series. Nice rebound. Hasn't taken out the 182.93 high of the 23rd, but the MACD has turned up, but it hasn't crossed positive. Stochastic is good. On balance, volume good is very good. This is nice price action, but really it's 181.50. Get to 181.50. There's no question that it could pop $1.75 points to retest the highs in a V-shaped pattern. And the weekly is at a peak D. So this is going to be very important. You've got peak A, B, C, leg D, and the 120-minute chart. IWM. Look at the IWM. This has been one of the weaker indices. It was one of the stronger indices going into the June high at 170.20. It's just been meandering sideways for a little while now. And right as we speak, we're looking at this is the lagging indicator. Small cap Russell 2000, small cap indicator says it's really struggling. Yep, it could make a leg D in the 120-minute chart, but it really needs to get to 160.70 or higher by Tuesday. And that'll be very impressive if it can. Well, now the Dow's rallying, it's up 60 points. Very good. So now what I want to do is go quickly to the 120-minute chart, show you something here. In the Chapman wave methodology, I had a Chapman wave 5 to the downside. And then I put this in the other day to say that, yep, I've got a 3 going to a 4, made a peak B, and then there should be a nominal new high, maybe going to a leg C. But my thinking was that there was enough resistance to go to a Chapman wave 5 here in leg C, unless it was strong. And this is strong. And that says, hey, this 120-minute chart should probably now go to a D. Why? The MACD's gone to 91% of the stochastic. So the MACD's expanded, very positive, and the stochastic is now at 91%. That is good action. I look at it straight on and I say, hey, all those technical positive, don't fight. Yep, go. Yeah. As we go out, I'll say gold right now is down 4, and that dollar to long still is pretty strong. I'll be back to talk about it as soon as it's turned.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So just to quickly show you the E-mini intraday, the 2-minute, 5-minute, 10-minute chart. Leg D in the 5-minute is very important because it's had very good technicals accompanying it. Now this MACD is very strong. Stochastic started to pull back, but still good at 91%. And I've got a leg C in the 10-minute. So that says any pullbacks should see at least another slightly higher high to a D. Most importantly, what we're looking at are the parameters to watch at 28.50. If there is a slide under 28.44 over the next hour and a half to 2 hours, that'll say, okay, probably on the very short term, getting a little extended, now needs to pull back some. But if it pushes into the 28.54 area, I would have to say that's very good action. Now let's get back to our story, not here, but here. What we're looking at in the dollar is that it had a really strong move to 95.51. Trading down 20 cents from there. It's at 95.31, but a very nice move. You see the gray A, that's not a gray A just per se. That's because it is underneath the previous high. And this is a leg that we need to consider as a bounce. Most importantly, what we're really looking at here is that if it goes above 75.65, that starts leg D. But look, it'll go into the Chapman Wave inside track repellent zone. So to really break above it, the dollar needs to close at 95.78, 95.83. If it does that, not only does the weekly chart really improve, but it suggests that that weekly chart could see an acceleration lower into Friday, and that really helps the monthly chart, because that monthly, look at this, the monthly chart at this particular point is trading from the 88.25 low. We went long at 90.07. It's trading right now 95.32. What's really important about this is that if it extends leg A, I call it gray leg A, above 95.65 in August, that'll be 1, 2, 3, 4, 5, 6. This will be the 7th month. Let me double check there. Yep, 7th month of higher highs. That is really extraordinary. And that says that the dollar has really raised the base of support significantly to the 94 to 93 area, if it can do that. So dollar so far very strong. As I said, gold was weak, silver was weak. Silver trading at 15.35, down 10 cents. Not breaking down like gold, but not a great looking chart formation. High-grade copper. I showed my subscribers over the weekend the high-grade copper, that the wood, high-grade copper right now is holding. It's like silver is holding quite nicely. It must hold 2.673. If it closes below that, that's not a good sign. What I said to subscribers is that together with wood, which is the iShares Global Timber and Forestry ETF, where did that go? What we're looking at is there is a sell mode in the weekly chart. And so far, this is saying that overall, the global utilization of timber and forestry has started to significantly decline in terms of chart formation. And we've got to watch this closely, because if there's a move under 74, close below under 74, it's trading at 75.79 right now, that'll be very negative. And put together with copper, that's just saying a global slowdown in certain areas is pretty much unfolding. That's what it will be looking like. TLT right now, TLT is trading up 29 cents, bouncing nicely. And my contention is still that if you look at the yields are kind of stuck in a range towards the upper level, but still stuck in a range. Look at this. I just think that you have to think of it that way. And until the Dow breaks down below 25,000, I'd say about 250, 20,200, until that support goes, that's where you should see other indices begin to weaken, and where you would see money flow from equities into the so-called safety of bonds. So far, this is just trading in a sideways formation. Hey, let's look at crude oil. Crude oil right now is trading up a little. It's not up a lot. Up 126 at 69.75. My contention remains trading between the 71.50, maybe just under 70 level as a high, and 66 as a low. And if it takes out 65 support, that's very negative for crude oil. If it closes above 72, that is very positive for crude oil. So it's right in the middle of the range. I think I've done everything. Now, questions? ITA, have I? ITA. I don't have this one done. I'll just do it very quickly, and then I'll check to see what it is. Trough A, B, leg B, peak C, peak D, peak E. Oh, that's an F. Oh, that is very interesting. Very unusual. Oh, this is I've got a couple of these formations just lately. Very unusual to get them. And that can't be GA. It doesn't work in the Chapman wave methodology. So let me just do one quick thing. What is ITA? It is the iShares U.S. Aerospace and Defense. Okay, I look at that through the PPA. So let me not, I've done the work on this and they match. Oh, it's exactly the same. I thought so. I was looking at this the other day and I said, I have to come back. Something is wrong. Well, the something that's wrong is that there is no H in the Chapman wave methodology. But unless I use something called the Chapman wave, the flat base, this is the unconventional flat base restart, which says that if you get this kind of pattern with the Chapman wave instant restart, but you break the low after trough D or E/A, whoops, it gets very complicated now, there's a good chance that it can rally, but when it turns down, it's going to take out the low. And that's really what you want to be thinking of. 57.07 is the low of the 25th of July. Whatever it applies to the ITA, it's the same thing. That particular candle of the 25th, that is now my target candle. That is under 57.07 is my target for the next 3 weeks. Somewhere within the next 3 weeks, we should come under, even if we go slightly higher. That's the way I'm looking at this particular pattern. So it's trading at 58.15. Let's look at Boeing. Boeing was weak earlier. Now it's come back a little bit. It is still down 2. It's still weak. Look at GD, which is General Dynamics, down 1.29. Let's look at RTN, which is Raytheon. RTN right now is down $1.52. So my contention has been that the PPA, which is the aerospace, is really not so much aerospace because it includes Boeing, which is really not aerospace. But the whole sector is going to be weak for a while to come because peace, is really more in favor right now than wartime activity or it's tariffs that are at war. It's not ammo and defense per se. So that's kind of where I'm looking at that one. So PPA, next question was IYT, that's the transportation index. Even with crude oil sharply higher, you've gone to a higher high. I've got this as F/B. The reason why I am going to make it a chance having an instant restart is I want to be ready for anything because the MACD is very strong and the stochastic is at 88% in the daily. The weekly chart still has a 206.73 high back in January, and now it's trading at 200.86. This is a good move. I didn't expect that the transports would run as strongly as this. Dow's up 75, S&P's up 10. I'll be right back.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So I just wanted to show a couple of things here. The IYT MACD is very strong. Stochastics at 88%. It had pulled back somewhat early on Thursday, but these last three green candles are really quite impressive. And it looks like that V-shaped recovery is going to try to get to the 201 round number high of the 12th, where it made a peak D in the day, went to a trough D, and then has run up. Now it's in F/B on the upside. This is good action, and that is important to the overall market. So the question was, do I have a far more negative outlook from my Trader's Corner? And the answer is no, I had for the Dow pulling back. But in fact, if we look closely, I was looking to buy. Mostly there are longs, and very few shorts on this and the overall numbers. And we still have a short in the semiconductor index, which so far is working out okay. It's under a little, it's tad negative, but the semiconductor index, look at this, semi is not working at all. It's up 4 cents at 107.63. So this is saying to me, this is a very important indicator. But I've said before that it's an unusual thing to discuss this in the jargon of Wall Street, and that is, I've been talking about this for quite a few weeks now and saying, I believe this is a market of stocks, not just really a stock market where you look at the indices, and there are some stocks that are doing very, very well. For instance, look at GT. Why on earth would Goodyear Tire and Rubber go from 20.75 on the 27th of July, remember 20.71, to right now 24.97. And look at the way this candle, and this is what I focused on in my over the weekend. Look at that spectacular candle breakout from last week, above the 9 period, the pink line, the weekly, and above the 14 at close. And now it's even higher. So if you look at the orders, look, General Motors right now, it's down. Ford looks horrible. I mean, look at that. Look at Ford. Oh, Ford looks just even worse. Toyota Motors came out with some good earnings. Where are they now? Well, even worse. They went to peak A, B, C, D, E in the daily chart in the 135s and trading right now at 128. So isn't this, isn't it fascinating what's going on? If you look at race, which is Ferrari, R-A-C-E, Ferrari was zooming to the upside. Now it's gone into a hairpin bend, skidding around, trading from the 149 area back on the 15th of June. Now it's trading at, just the other day, to 116. It's trading right now at 124. Does that make sense? So this is one of the few times I'm looking at the market and I'm saying, it's fascinating how this market is not making sense in some regards. There is no linkage to what would normally be a link. And therefore, you have to treat it as individual stocks that are acting well. I'll look at our UTX, which we still have a position in, held the 14-period moving average, up 18 cents, not pulling back very much at all. 133 is a key support in the 14-period moving average of the daily. We've been long since the 119s, and look at it. The weekly chart is starting to improve. It says that it's trying. I'm not sure yet whether we're going to add to the position again, but it's trying its best to make that Chapman wave inside wedge light green target resistance line kind of a magnet. Isn't that interesting? And Triple M, which we don't have a position in, but it's been something we followed very closely. We missed, I wanted a position at a particular price, and then at the very last minute, I raised that entry point, and we would have got it I lowered it. So at one particular price, I lowered it so that we didn't get it, and now it's holding quite nicely. I have to rethink about it because the weekly chart is starting to improve. So you can see what I'm saying is that I'm looking at individual stocks which have had Triple M multinational 3M company trading at 207.10, a horrible, horrible pullback from the 260.59 area back in early 2018. I think it was January or February, slumps down to 190. I mean, that is a big, big move down. Is it now done? Is it now trying to build a base because it's now about to change the corner? That's why I'm saying I've got to be very careful. I don't want to be aggressively, at this point, I've got to be very careful to select because we're trying to get those positions like we did with the dollar, like we did with UTX, why we did with the most recent sector that we went long. I'm trying to establish some positions that are looking out longer term. And if you're able to get them at a good price here, when you look back, even with consolidations, they've held their support. That's kind of the way I'm looking at it. So just to sum up, yes, way too negative on the Dow in terms of position, but not too much has changed. At this particular point, look, here's the Dow, getting close to that 25,587 high of the 26, not the all-time high of 26,616. What happens in the next couple of days is going to be very important. So I just wanted to show that in terms of the stocks, we've actually been looking more at long positions, and the indices, we've been looking at some of the indices look like they are topping or trying to top. Okay. Next thing I want to look at here is a question about DISCA. DISCA is Discovery, and what is interesting is that this is Discovery Inc. Discovery Inc. What does that say? SE? I don't know what the full title is. Let me just open this up. Oh, Discovery Inc. Services A. Okay. Discovery trading at 27.07. The question was, should I add to a long in DISCA? That's a very different question. If the question was, should I buy? I would say I would hold off because, yes, it's making a turn, but the turn is not yet being complemented by, how can I put this? By a break above certain resistance levels. Therefore, I'm thinking that at 27.06, it's between 27.35 and 26.50. That's the area that I want to make some kind of a decision for you. Now, but if it's add to, I'm going to say, oh, if you want to add to the position, the MACD is just about across positive today. It looks like it could. Stochastic's rallying. On balance, volumes rally. It's got a lot of resistance to get through. But what's nice is it's trying to establish the mid-26s as 2650, 2660 as some kind of important support. So I would say yes, in your case, I would add to it. It's in communications. I think I would add to it at 2706 because you've already got your core position. Now, I would treat this as a trading position, and I would put a stop in. I'd give it a little bit of room, maybe 2.5%, much more than I would normally give it. I'd like to give it 1.5%. Maybe just under 2, but yeah, I'd say I'd give it a little bit more. Why? Because if it doesn't pull back in the next 3 days, but instead all of a sudden it pops from 27.06, the high today is 27.26. If it can get to 27.32 or higher, I think you got yourself a really nice second entry as a trading position. This will be great because the resistance is at 28.08 at the 200-period moving average in the weekly. I'll be right back.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Folks, so let's get back to the questions here. X is U.S. Steel down 82 cents at 31.48. I was asked back around about the 16th, the 17th or so of July whether or not this was a buy. And what I said is the whole thing with tariffs having pushed it higher made me really nervous because they have to produce the goods. They have to come up with a profit. They have to come up with the real thing. And I was very nervous. It made a peak E-top at 39. What was that? Let me just check the price. 38.89 on the 24th of July. Trading right now 31, 8-point down. That is a big move. Wow, that's 12% or so. No, more. 22%. So what we're looking at is within the context of U.S. Steel, there's this pattern that I talk about, the H formation right here. There it is. Okay, and that H formation says that that left side low bar in the weekly chart of that May the 4th, 31.37. Whoa, just about to take it out, and the monthly chart is not good. So I would say no. You can't. AK Steel, same thing. AK Steel down sharply. Whoa, this is not good. And NUE, wasn't that new call? I can't remember. New call. Yeah, Steel. New call trading right now down 59 cents. I'd say just be really careful. I wouldn't get into any tariff type situation because anything can be said, anything can be done. New call made a peak A, B, C, D, double top in the weekly chart. It's pulling back quite sharply. Just be really careful. That's the most important thing. Question about the comp index, COMPX. Yes, comp index is up 33. Made a peak D in the weekly chart last week. Had a peak F way back on the 25th at the 79.33 level. Goes under 70. It goes to 7,600. Trading right now at 78.45. Nice rebound. Technicals are not really confirming it. They are rallying, but they're not leading. The MACD is still very positive technically. So watch this closely. A close below 7,700 would say, that H pattern's going to be kicking in the comp index, NASDAQ composite index. This is the broad composite over 2,000 stocks, I believe. And a push into the 78.90 says, hey, we could be testing the previous high, and that high didn't put it in, 79.33.31 on the 25th of July. So far, good action. we'll see whether it's going to make an H pattern failure or if it makes a V-shaped pattern and keeps running. Next thing we're looking at here is CLB. CLB? Oh, CBL. Oh, CBL, dollar CBL. Dollar CBL, oh, just the stock CBL. CBL and Associates, $4.85. I'm not sure why this is here. Have I spoken about CBL and Associates? Yeah, I don't know if I've spoken about this, but it's at 4.85. It looks very poor. If it breaks, if it closes under 460 on the weekly chart, probably it's going to go even lower. Be careful. RTH. Okay, RTH is the Market Vectors Retail ETF. This is the same pattern that we're seeing in most of the indices. It gives a sell signal to sell mode in the daily, then has a really strong retracement, and it goes from a high on the 27th of 105, round number high, comes back down to 101.81, trading right now at 104.07, just an eye blink away. Made a peak C. I think it's going to go to a leg D higher in the weekly chart, and that would be above 105. So I can see this going above 105, probably this week. Good action today, up 18 cents. That's a lot of points to get, but maybe this week. And the monthly chart is still very strong. Must hold the low that was made over the next week and a half. If it closes under 101.81, I'd say if it closes under 101.30, that's very negative. But so far it's acting well. So we've gotten through a lot of the questions. Yes. So a couple of things that I had asked myself over the weekend as I was doing my work. What would be the trigger for a push in the Dow? And let me just show you the chart that I was looking at. In the weekly chart, above this whole resistance area of 25,800. One of the things I always talk about here on the show is that if there is no negative news, there tends to be a bias towards the upside. So there is the potential for negative news, but there is no noise and no news, and news very often is noise. So I like to look at the chart formations, and what I'd said, shown my subscribers, is that this falling axe, the lower highs in the daily chart of the Dow and the much lower lows, says that if it takes out decisively, and on Friday it took it out by 20, maybe 30 points higher than I anticipated, if there is a follow-up to the green side in rallying, I've got to be looking at this and saying, okay, what are the chances now that we've used up a tremendous amount of time from the January 26th high of 26,616 down to the double bottom in the 23,300s, and even though it's just choppy to the sideways action right now between those levels, you've used up 6 months without breaking down, and yet without so far breaking above 25,800. And that's the reason why I'm thinking that this particular resistance that we're coming into right now, in fact, in all the indices, has to be monitored closely. And it's the reason why I'm looking very, very astutely and very carefully at stocks like a Caterpillar, ones that have been beaten down, beaten down, and are trying desperately to form some kind of a base. Caterpillar, part of the Dow. If you look at the V, which is Visa, it also they all had the same pattern. Made a high late July, in this case 145.54 on the 27th at peak E, pulls back for it. This is a pretty darn big, quick pullback to 135. So that's only 10 points, but it's one of the quicker moves it's had to downside. Bouncing nice, but stalling with the potential of making this pattern. It's either going to be a V-shaped pattern or an arch formation. So while I'm doing this, I'm saying, okay, let's look at the others. Peak F, doji high in the weekly chart, leg E, no technical damage at all so far in the weekly and the monthly. What about MasterCard? They all do something different with their cards, right? Some are just facilitators. Some actually have, the card is more important to them, the loan itself. So all of them do something different. Look at this peak G in MasterCard, MA, trading at 201.18, down 2 cents after that huge move to 214 in July 25th, 214, and it slumps in a one huge move to the downside to 196. That is big stuff. And the weekly chart is starting to weaken a little bit. And that's the reason why I'm saying I've got to look at these individually to see how they're going to impact the total down. I'll be right back.
My dad, may he rest in peace, always had great advice, such as, if you want more, you have to become more. It's been a guiding light that has driven me to always be the best that I can be. When it came to trading and investing, I wanted more, and so I developed a set of disciplined tools that led me to become the #1 market timer for the S&P 500, according to Timer Digest. Dad went on to say, if you want more, you have to give more, which is why I took those same disciplined tools and created a black box that could look at any instrument for any time frame and tell subscribers and I whether it was bullish, bearish, where support or resistance was, and whether an instrument was forming a top or a bottom. The scans from my black box are now a part of the Mastering Probability service, which allows me to give more to subscribers. This coming Tuesday, August 7th, from 5 to 6 p.m., I'm holding an open house at TFNN.com, and I'd like to invite you to see the power of my black box. When it comes to trading and investing, I know I can help you become more too. Just go to the homepage of TFNN.com to sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Stay tuned for Steve. Stay tuned for Dave. Stay tuned for Tom. And welcome to Jason, who kicks us off at 8:30 a.m. in the morning. And don't forget to tune in. So I'm looking at the down. You can see the Chapman Wave automated resistance lines are right there, 25,395, 25,461 on the daily. We've gone above the 25,500 level in the 10-minute chart, and the weekly chart is 25,459, and the 120-minute chart is 25,593 and 25,595. So we're about to bump into strong resistance. If there is a move above 25,620, I think that that left side high that we were looking at right here in the Dow, right here, of 25,800 will become really important. And that's the way I'm looking at it right now. So in sum, we're looking at the volatility index now. Let's go to the VIX. The VIX is down at 11.33. So just keep it in mind, 1107 was the low on Friday. We're at 1133. The weekly chart is just that a whole bunch of red candles in the volatility index, and let's just make it as simple as possible. If the VIX stays under the 13, under the teens, that constitutes basically buying pressure, and especially if it stays in the low 11s or even perhaps goes into the high 10s, this is going to be buying pressure. The moment you see the VIX start to hold on a closing basis, intraday is not the issue. On a closing basis, if it starts to get to 1255 and 1285, then 1330, and starts to close there, that's going to be very important as a topping signal. But right now, it says, hey, VIX has pulled back. It is now still in the buying range, meaning the VIX pulls back, the lower it goes into the double digits, but not the triple, not teens. That says buying pressure. So keep that in mind. So with that said, check out my opening call, and don't forget, got Steve coming up with other programs. I'll see you tomorrow. Have a great day.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.